Little drink of water here. Okay, so welcome everyone to the Mobile Mailbox Money Mastermind. Unfiltered value in these meetings, different individuals joining at any given time, from capital investors to Arizona real estate agents to capital investors, as well as operators nationwide, hedge fund managers, note investment educators, and all the above. We're here today, winmobilehomes.com and Mobile Mailbox Money, scaling affordable housing. Today, our guest speaker, Kristian Berry, will be talking about the Arizona real estate market Cromford Report. Those of you that don't know, the Cromford provides in-depth numbers into Arizona real estate health, from like purchase prices, average days on market, and a couple other case-specific identifiers. So, Kristian, I appreciate having you here today. Just to kick off the meeting here, we'll do a quick house cleaning, let you guys know what's going on, what we've been doing the past couple of weeks. We just got back from Florida, looking at potentially bridging the gap from Arizona to Florida in niche market, seller-financed, manufactured housing, and some potential subject-to programs with a boots-on-the-ground partner that we found at Diversified Mortgage Expo. Just had a new agent come on with Win Mobile Homes over the past 6 months, who's done upwards of $1 million in transactions, who found buyers and qualified them to conduct a transaction so you can invest in that note. Today, we actually have a featured note available. I'll run through this real quick, and then we'll get to the Arizona real estate market update. But I've got a note immediately available. I featured this on my channel earlier today, and this is a first lien performing note that's currently being underwritten and going through the formal processes. This first lien position will be a $60,000 acquisition. They're putting a $5,000 down payment, so it's $65,000 price, right? $65K. That buyer is buying a 2-1 in the Mesa market. Seen above here, it's got laminate floors. We did some granite and new cabinets in the kitchen. And as a 2-1 in the Mesa market in a family park, a property like this could go anywhere from $50,000 to $85,000 depending on the park. So we're right at the middle of that, really, at $65,000. This buyer will pay $790.07 a month for 20 years. If you don't have a mortgage calculator, do yourself a service and download a mortgage calculator, because you can calculate what your return on investment would be on a performing note just like this. So that provides an investor a double-digit yield, a collateralized lending opportunity, and a hedge out in the market in affordable housing investing like Warren Buffett. When a buyer comes to us and purchases a manufactured home, our objective is to match or beat market rent with the lot rent and the home payment. Well, why do we do that? We do that to hedge our risk, so the borrower can't just walk away in 6 months and have a cheaper place to go, or even somewhere comparable. They'd have to come up with additional funds, pay additional monthly in order for them to facilitate something of comparable value. So what are our rental rates in Mesa right now, just on apartments.com, and then we'll get to the Cromford. But average rents in the valley are really like $2,000 a month, and we've seen some a little bit softening, but on apartments.com, around this house, 5 Mile Lasso of this lot, 56, I think it is, in Winter Cove, for $60,000, cash flowing $790.07 a month for 20 years. A 1-bed, 1-bath could cost an individual $1,200 a month, so they could walk down potentially to a 1-1, but not really ideal when someone's purchasing a 2-bed, 1-bath. 2 bedrooms are going for like $1,600, $1,800. I'm seeing one as low as $1,400. That would be bottom of the barrel, obviously. Subject quality, subject area, with this home being in an established all-age park with lower lot rent's like $650. So with lot rent and the home payment, this borrower buying lot 56 on terms actually matches rent. So that's kind of the calculator of in order for us to facilitate a bank quality hedge, first lien position, and institutional cash flow with a double-digit yield. Obviously, there's some other due diligence items to go through upon your soft commitment, and I can't share those with you today, but upon soft commitment, we'll send you the full collateral file, which includes their credit criteria, their verification of income, verification of insurance policy, ultimately providing a bow for the capital investor to review and fund potentially within a 48-hour program. That's a little house cleaning. That's mobile mailbox money right there, creating institutional cash flow at a double-digit yield. Today, our special guest is providing insight into Arizona real estate, Kristian Berry from the Berry team. I've known Kristian for a long time. Kristian, appreciate having you out here today on the channel.
Yes, sir. Thank you, Alden. I appreciate you having me. Look forward to giving you valuable information.
Boom. I think a lot of people look at Arizona as a market indicator of what's going around in housing, health in general, nationally. Arizona's been a strong market. We have a lot of transients as well as full-time residents, but also second home facilitators from Canada, and kind of a wide breadth of dynamics in the market here in Arizona. So, I'm anticipating what today's going to be. We see a lot of headlines out in the industry, and a lot of people are scared, I think, ultimately, on the sideline waiting to make a decision. But with uncertainty out in the market comes potential opportunity if you know how to navigate it. And I think getting numbers like these provides us all, in-depth information and really gems for us to get out, operate confidently to ultimately earn a return on investment. So Kristian, let's dive in. What are some of the markets we're talking about today?
Yeah, well, I've got most of the most popular markets we've got are Chandler, Gilbert, Mesa, Phoenix, PV, Scottsdale, Tempe. We could talk about all those if you'd like.
Love it.
Importantly, first thing I want to talk about is what I saw across the board is the amount of listings went down throughout the valley, which was really shocking to me. Except for Chandler, their listings went up, which was it makes sense because it's a seller's market and they want to take advantage of that. But I just thought that was pretty funny with the market not moving much at all, but the listings are going down as well. So I think we're looking for a price adjustment is what we're going to see in the future. So
Yeah, and people are kind of speculating, what that is, what could a potential price adjustment, look like as far as a percentage value. And it's hard to gauge at any given time. But let's dive into the numbers. What are we talking about today? Average purchase price, days on market? What are those kind of things that we're talking about each market? And then we'll get into case specifics.
okay, so let's go to Chandler first. We'll go with days on market. This month they were about 71 days on market. The month before it was 4 days less than that, and then a year it was 20 days less than that. So we're seeing a little slowdown there. But the median price point in Chandler is $560,000, which went down $3,000 last month, and it's up 100,000 from last year in Chandler. So they're still positive.
So that's like a 10% appreciation
Yeah.
from last year. They're seeing softening, little 3,000 off. What is that, like 1%?
Yeah.
Maybe less. Actually, it is less. But yeah, keep going. Let's talk about it.
Yeah. And we'll talk about the supply, what Chandler has. They have about a 2.5 month supply, which they are a seller's market. So we'll see how that goes in the next coming months. We'll go to Gilbert. Days on market still around 70. The month before it was about 5 days less than that. And then a year before it was about 20 days less on the market. The average median price point in Gilbert is 600,000, which is 2,000 less than last month, but it's only about 5,000 more than a year. So you still see an appreciation, but not that much. And they're leaning towards a buyer's market, but not too much. They have just under 3 months of inventory as well. And
Chandler's been pretty hot. Gilbert's a little bit of that off market, West Valley, a little bit less desirable. People are looking for more affordability in those markets.
Yeah.
Uh,
It's funny you mentioned that because I had an agent in my office today that said he had a listing in Gilbert last week. It was only on the market for 2 days. So, there's
Price right.
yep, exactly. So yeah, that was pretty funny. But
Glendale on the board.
yes, sir. And we'll go. It was Gilbert.
Or yeah, Gilbert, sorry.
And Mesa, they're about 80 days on the market right now, which was 6 days less last month, and it was about 18 days a year before that. Their median price point is 490,000, which is down $2,000 from last month, but it's still up 50,000 from the year before. They're also slightly a buyer's market, but they also have about 3 months of supply. So let's go to Phoenix.
Chandler, Gilbert, and Mesa are kind of clustered here. Mesa's East Valley, Chandler's that more south of Mesa, Gilbert's, right kind of in the mix of that. I can't remember if that's more east. Anyway,
Yeah, it's more east. Gilbert's more east.
so all pretty centrally located. You've got your Scottsdale market. All are within maybe 45 minutes of each other if you're not from here in Arizona.
Yes, completely right. And then we could go to Phoenix. They're 80 days on the market as well. 4 days less than that last month, and then 20 days. It's pretty much standard across the board. That's what it's looking like. 4 days less last month, and then 20 days the year before. But the average median price point in Phoenix is 480,000. That's down 4,000 from last month, but year to year it's even. They haven't moved or adjusted since last year. But they're also slightly a buyer's market as well, and they have upwards of 3 months of supply. So let's go to PB, which is a big number that we like to talk about. They are on the market for 145 days right now. Last month, it was 136, which is 9 days less. And then a year ago, it was 157 days. So PB is a different market, but their median price point is $3.9 million.
Luxury real estate.
Yes, sir. And that has not changed since last month, but it is up $300,000 from last year.
And how many days was it on market?
145 days to sell your home.
Yeah, that's interesting because a lot of people, fix and flippers alike, have seen data regarding luxury real estate kind of almost flying off the shelves, I guess, if it's priced right.
And
But
that's what I'm it too is it's a seller's market in Paradise Valley, which just shocks me, because they have 4.5 months of inventory,
right.
but they're a seller's market. But that's what luxury doesn't make much sense. So
So that's PV. Do we talk about Scottsdale yet?
yeah, let's do Scottsdale quick. They have 111 days on the market right now, 5 days less last month, and then it was about 100 days on the market a year before. Their median price point is 1.175 thousand or 1,175,000, and that is up from a year 100,000, but it's still the same from last month. And they have about 4.5 months of supply, so they're just with PV the same, pretty much just staying the same.
And remember, Jerome Powell, the Fed, was supposed to reduce rates, quote unquote, twice already. And out of their, however many Fed meetings they've had over the past 6 months, they've kind of staved from doing so. They still claim that 2 rate cuts are going to come this year. And obviously, what happens when rates go down? Prices could go up. I don't have a crystal ball, but if time tells true, and we don't end up getting into a true, large scale war of what's going on with the nation and the world, if interest rates come down, that could see pricing jump. So now may be a time, to ultimately get out and search for deals in residential real estate itself. Still kind of a challenge with DSCR loans and down payments and rentals not cash flowing. But, for a long-term play, it could be potential to get deeply discounted inventory, which is always, a great thing to see as a capital investor. Really, for us, it's great to look at the overall breadth, of pricing in the valley and the available options. An end user, first-time home buyer, capital investor, what are those options? And it sounds like everything is that we just talked about in these major metropolitan markets are over 490. What was the bottom was it Mesa?
Yeah, it was Phoenix for 480.
So that was, I think 2 months ago, that was like 465.
Yes, yep, you're completely right.
So, really interesting to see the dynamics of pricing in such a volatile market. The news is going crazy. Rates haven't come down, but pricing still, people are saying price is going to fall 20 to 50%. It could correct, and we're seeing some correction, but there's still, a lack of inventory. By the time a builder tries to go out and build a single family property with the lot and development, labor, material, it really starts to price it above that medium price point, in order for them to even make a margin. Permits here in Arizona have gone up 2, 3, 4 times in the past 5 years, and that's just strictly the build out. And there's a lot of people with 3% mortgages. There's millions of Americans that are locked in at 3% mortgages that are really most likely going nowhere unless they did a cash out refi at some point. And really important factors to take in. That way we can make the best educated decision. Kristian, the people that you're talking to, that are looking at buying homes or looking at buying investment property, what is kind of the take that they're having at this time? Concerns or questions? What are kind of the major topics that people are discussing coming to you as an agent here in the Valley?
Yeah, a lot of my clients, they were scared of where the market was, and they're starting to see the light. They're seeing the positivity come and seeing that they can make some profit, or make some deals happen. And there's a lot of talk going around, but it's just nobody's moving yet. That's the issue I have. So
we could be on the cusp of, people kind of jumping in, and I think that's really going to be an interest rate reduction.
that's exactly right.
I saw this funny meme where it was this guy, making fun of when an interest rate comes down and the whole real estate market just lights up, and all the lights turn on. So kind
That's what it is. There's no buyers in the market right now. I mean, not as many as there should be. So that's there needs to be a change.
What's crazy about that is I think Win Mobile Homes is going to have one of our most successful months ever in 8 years of doing business.
Let's go.
And that's in the face of uncertainty, in the face of potentially a quote unquote a buyer's market, in case specific areas. We're pretty wide across the valley from Tempe, Mesa, Glendale, Phoenix, Apache Junction. I've touched Chandler once or twice. I'd like to get back over there. But with like 1, 2, 3, 4, 5, 6, 7, like 7 homes, I think that we're trying to get to the finish line here this month. That's like $500,000 in inventory. And as a business, out operating right now, I think there's not all that many opportunities, ultimately to turn a safe, stable, solid return on investment. A lot of businesses are suffering because the insurance increases, and, people with target market of individuals who have high debt right now, people aren't so much spending frivolously, and that cuts down on frivolous spending. And, when a renter's not upkeeping a property, or, all areas of discussion and important to pay attention to, in a market just like this, more important than ever, because, there's manipulation going on in the market from BlackRock, Vanguard, State Street, and all the other big whales, like Elon putting out a tweet, throwing a wrench in an investment strategy. It's tough to know where to go, and buying deeply discounted single family, could be a potential option. If that's an option that you're interested in, obviously hit up Kristian Berry with the Berry team. I'd be happy to, walk you through a property, or, just maybe even answer some questions. Kristian, why don't you go ahead and give your phone number real quick?
Yeah, I'll leave it in the chat. My number's 480-789-2494. And I'll leave all my contact info in the chat. If you need anything at all, feel free to give me a call.
The Kristian's, he had listed a few of our mobile homes a while ago, and has, some other luxury real estate listings, some rentals at any given time, but, looking to be of service. So happy to have Kristian here today. Multiple notes that we have immediately available. I see multiple of our investors here today, just to let y'all know, that bridge gap from potentially Arizona to Florida with winmobilehomes.com comes off the back of an institutional relationship that we've made with a company that owns, I think, 100 parks nationally. And we actually got favor from them in order to operate at scale. So that's why we throw these masterminds and stuff, to bring not only data and market-driven analysis in order for us to make a better decision together collectively, but also let you know what's going on. And I actually met, of all things, Roy Tompkins at the Inland Empire Real Estate Club, who's operating in some of the same institutional ownership in California, CalAm Properties. Roy, I saw you had multiple deals going on in California. Maybe you could just touch on that if you're available.
Yeah, I do. I have a couple of flips that were flipped. Yeah, a few of them are in the CalAm properties. I have about 4 or 5 of them in there. This is in Hemet, California. I also have a couple in Palm Desert, California, and Fontana, California. So those were all going to be seller financing available. We just sold one on a note. So yeah, market's still going okay. We did see a little bit of softening, but it seems to be picking up again. But it's the waiting game for the reward sometimes.
In manufactured housing. Wow, we got another guy operating, doing flips in manufactured housing. Great to hear. For those homes and your potential price softening, what kind of percentage did you kind of see with some uncertainty out in the market? Is there kind of a ballpark? Is that like 5-10 grand, or is that, larger? What's your opinion of that?
For what now? I didn't follow your question there.
So for price, we mentioned how price is kind of softening a little bit at purchase prices. What does that look like? Is that 5-10,000, or is that kind of a percentage, like 5%, 10%? What would you say about that?
So it really depends on how quickly you want it to sell. So we have some that we can afford to let them sit longer until we get the price that we want. And for those, we don't drop the prices. But for some where it's a little tighter timeline, we need to pay off short-term lenders, things like that, then we'll drop the prices. Probably you typically about 5 to 10,000 before we get buyers quicker. So yeah.
So the Inland Empire Real Estate Club is pretty manufactured housing centric. I think that's probably the largest group of manufactured home operators operating in a fix and flip and seller finance created strategy, maybe in the nation. I haven't seen another like that. So I was happy to come out to y'all's group and meet up with y'all, Goodwin, and what's the mobile home wizard's name?
Andy.
Andy Teasley.
Yes.
So shout out to them for inviting us out to their group. If you are in California, go check that out. Inland Empire Real Estate Club. Hit up Goodwin Yee or Andy Teasley. They'd be happy to send an invite to you. And we actually did a real deal. A real deal got done in their exchangers group. And it was one of the most creative deals we've ever done as a business. In 8 years, 300 transactions, over $10 million in manufactured home seller finance notes. How did that work out? Well, I'll tell you. That home we actually had listed. So we operate also as a brokerage, a listing service for niche market manufactured housing, right? The seller wanted a price of, I think it was like 130 at the time. So we listed it. We found a potential buyer, but they needed financing. And Roy, how hard is it for someone to get financing on manufactured housing?
It's not hard at all. You get the deal under contract. You could take it to exchangers. There are plenty of people there that want to put their money to work. They just want to look at the numbers. If it makes sense, boom, you get the funding. So very
So that's private money, and having the knowledge to execute a transaction like that is of utmost importance and pays in spades. But third-party lending, like 21st Mortgage or Cascade Financial, they're kind of tough to navigate, and that's why the private money seller finance flourishes. But we'll get to there in just a moment. As people come and try to buy a home, they have little to no other options 9 times out of 10 because the lenders have such case-specific requirements in credit criteria, tax documents. Do they have a valid driver's license or U.S. Citizenship? ITIN financing is almost non-existent. All areas of problem that an end user buyer, when wanting to buy a property for $130,000, comes into. So that created a problem where an opportunity presented itself. So the seller, we negotiated a cash price for the seller who listed with us as a brokerage, right? In order to facilitate a margin, we got it the seller at a negotiated cash price. We confidentially got it down to 124, including the commission to the agent, right? So originally it was like 130. So we got like 10 grand off, something like that before commission, right? 124, negotiated the cash price. The buyer happened to be okay with paying a pref, an extra fee in order to facilitate the financing. So we increased price, warranted for this property. It's actually worth more than what we sold it for, but in order to get the deal done and price it right to move it quickly, we facilitated a transaction. So we made a margin, right, on a property we didn't own. We found a buyer, borrower, qualified the borrower at 145. We made a $20,000 margin between the cash price and the buyer borrower purchase price, right? Well, challenge here is a lot of stuff over $100,000. There's not all that many hedge funds or larger investors that want to participate in a larger note like that. You maybe talk to a few that have $500,000 that want to buy a few notes, but they may end up running out of money. So the real sweet spot is like 50 to 100. I bring that up because we created a note with, really, the original agreement was the buyer was putting 20,000 down, right, and financing a balance of 125 over a period of, I think, 20 years. And I don't have the payment in front of me right now, but a property we didn't own. We created a margin, find a buyer borrower, originate a note at 14 or 15%, right? Created the margin, originate the note, seller carry to Ginnie Mae. The challenge with $125,000 prices, it's a larger price note and not as many people have that much amount of capital, right? There's case specifics where individuals do, but long story short, we enticed the buyer to put additional funds towards the balance via a trade for credit. What does that mean? That means that they owned a home free and clear, and they actually traded for credit towards the balance in order to reduce their unpaid balance and seller finance note for us to have a more palatable exit via private lending or a capital investor buying this note. So not only did we create a margin on a house we didn't own, we also got another free and clear asset that I think's worth 80,000 ARV. We gave them 20,000 credit towards the balance. They put 20,000 down. The overall balance of that house that the Ginnie Mae bought, not the home they traded in for credit, actually was $100,000. And it all comes full circle here because I went to the Inland Empire Real Estate Club and we found 3 wrap lenders. So 3 lenders that participated in the same note via wrap lending, right? And I think it was like 46,000 and like 6,000 or something, you know, some small balance on the end. But got the transaction done at $100,000 balance. Those investors participate at the double-digit yield and interest received in a first lien asset. The loan to value on that property was like 70%, so they're in a favorable situation in a solid, stable manufactured home in an institutionally CalAm community. And the cherry on top of the entire conversation here is I think my agent who sold that house actually has the trade-in for credit house pending. So we stand to make upwards of over $50,000 on one transaction of a property we didn't even own. We didn't even own this property. We had it listed. We provided a service and a need, ultimately creating a creative transaction in order to facilitate the needs of the seller, the buyer, the investor, and us to make a profit, which is of utmost importance because we're here to make a profit at the end of the day. So that's just quick update on the Inland Empire Real Estate Group, how they funded that transaction. So happy to consummate that sale the other day. Shout out to the agent that sold that property, Alan Duran. I hired Alan actually from a Business Network International meeting. So Business Network International is referral-based networking. I attend that once a week at Orange Tree Golf Course in Scottsdale, Arizona at 11:15 on Wednesdays. And B&I has afforded me upwards of $2 million in transactions over the past 3 years. So that's almost $500,000 a year, maybe a little bit more, attributed just from Business Network International. And, you know, happy to be a proud member of B&I for the past 3 years. We've got multiple notes available. That was just a quick recap of one of the most creative transactions we've ever done. So if any of you have deals, you know, that you are wanting to potentially bring forward and see kind of what that looks like, let's get on a private call and ultimately, you know, shoot it around. That's how we got in contact with the individuals in Florida. Ultimately, and you know, the reality is we can only do so much ourselves. At the end of the day, we run out of money, we run out of contacts, you know, and in order to bridge the gap of a $50 to $100 million play, you know, it takes multiple operators, multiple highly intelligent investors, highly intelligent operators, you know, in order to actually accomplish something of that nature. So I appreciate each and every one of you being here today. Does anyone have any questions about the market at all, or like what we're seeing maybe in California with Roy or Arizona real estate with Kristian? Any open questions? Couple new attendees, Guna and Ray. Appreciate having you here today. I won't call on you. Appreciate you being here, just, you know, soaking up the environment. Today may be a little bit short, but, you know, unfiltered value, man, for us to be able to sit and openly discuss what's live going on in Arizona real estate and with Wind Mobile Homes, you know, it is worth its weight in gold. We do this mastermind every 2 weeks at the same time on Thursday. For now, it is free. So we're opening it up to, you know, other hedge fund managers, other operators, other niche market seller finance specialists, other specialists in manufactured housing, real estate agents, you know, and all the above, ultimately to turn up some deals at the end of the day. So, you know, I love the exchangers and Inland Empire Real Estate Club. Let's, you know, don't hesitate to reach out to them to go check them out. If you're going to go visit the Inland Empire Real Estate Club, please let me know. I'd love to meet you there. and plan my trip accordingly. We're definitely interested in going back to, rub shoulders with other operators in manufactured housing. We have about $500,000 in escrow, everybody. That's about 5-7 notes that are potentially available for your capital investment. Today is brought to you by Silvercrest Opportunity Fund. If you're an accredited investor here watching today and don't find yourself a note investor, or don't want a 20-year term, or really just want a passive bank quality stability outside volatility and fluctuating interest rates, and you want contractually agreed upon returns, well, here's your opportunity today. Invest accredited like Warren Buffett in the income-oriented investment strategy for a 1-year term at 10% net paid monthly, or 3-year term at 12% net paid quarterly, investing like Warren Buffett. Appreciate having each and every one of you here today. Don't forget to like, comment, follow, and subscribe. Go back and view the vlogs, the podcast, the other previous masterminds. Riverside, California in the house, Mr. Roy Tompkins. So I appreciate each and every one of you being here today. Call now if you'd like to talk, have questions, or you're wanting to deploy capital immediately at 602-888-CASH. We'll see you guys next time.